Those are the three most important charts in the markets, according to our traders. Now let's hear from someone who actually does this for a living when it comes to charts. Chris Verrone is the head of technical analyst at Strategas. He has three charts to play heading into September. Hey, Chris, what are your three charts?
Hey, Mel. Yeah, so we brought along three of our favorite longs for the remainder of the year here. But I think it's first important we just put this discussion in a little bit of context. Here we are. It's September 1st. We're 8 months through the year. Where do we rank thus far? And if you bring up our first table here, S&P up 20.5% through August. That ranks historically as the sixth best year to this far that we've seen since 1950. And if you look at the other years here, 87, 75, 1989, 95, and 97, discrete September returns, so that following month, tended to be mixed. It was a coin toss. You had three down, you had two up. So I just want to be aware of that. We know the seasonality here into September. We want to pick our spots. And I think if you look under the surface of this market as well, it argues in favor of picking your spot. So our second slide here, just showing you the percent of stocks above the 200-day moving average in the S&P. This peaked in April around 97%. So almost every single name in the S&P was above the 200. And we wrote about this idea of peak breadth and peak data. It would be hard to do a lot better. And over the last couple of months, we have slowly seen this weaken under the surface. I don't think it's a huge deal, but it does argue that you have to be a little bit more selective under the hood here. So these three names that we brought along, I think, are three timely longs for the remainder of the year in a broader environment where you probably want to be a bit more selective. So first name, we love insurance, AIG. AIG is breaking out of this 5-year downtrend. It's pausing here in, let's call it the mid-50s, but big breakout over the last several weeks. I think this pushes towards 70, and we love the fact that insurance has held up despite bond yields down. I mean, we took yields from 175 to 115, and insurance actually outperformed. So good name here. I think this is the leader in this group. We like it going forward. Second name, another stock that has held up really well in a challenging macro environment, Alcoa. The metals have traded pretty well here. The steel stocks certainly have as well. Alcoa, new high today. It's been in this 31 to 45 range for much of the last 4 or 5 months. Just start to punch its head above 45. Our target is 60. We like the group. We like the name and a favorite of ours going forward. And then lastly, Pfizer. Maybe a little bit more on the defensive side, but when you take a step back and look at the longer-term framework for Pfizer, really this just broke out of a 20-year range. It's come back to this 45 level. That's where it broke out from. I think very timely to add to it here. We love, in the spirit of big bases and big breakouts, I mean, there's probably no better example here than Pfizer. Very timely at that 45 level. And the other thing we love about it, there's like 20 analysts who cover it, only 6 or 7 buys. So we think there's room for the sell side to upgrade this name as we move through the remainder of the year. So 3 names, AIG, Alcoa, Pfizer, good longs here.
All right, Chris, thanks. Good to see you. Chris Verrone of Strategas. Guy Dami, which chart do you like?
Alcoa can't wait for you 70s football fans out there. That's the one I like. And Tim will remember this. It was, I think, the spring of 2018. And Alcoa, like U.S. Steel, was off to the races. Obviously, we got the tariffs from the administration, for better or for worse, but those stocks got obliterated. Now you're starting to see a lot of these names get off the mat. Obviously, Alcoa reports in a couple weeks. Goldman Sachs just put it on their conviction buy list. $51 price target, I think, in the middle of July. I think this is a name you can continue to own into earnings, so it would be Alcoa for me, Mel.
Karen, how about you?
Pfizer, definitely. I mean, for a lot of reasons. I think, when I think about this rotation to things that are relatively inexpensive, big cap pharma is certainly in that group. And so I like Pfizer for that reason. I also like it for the potential booster reason. I know that it doesn't move Pfizer as much as the vaccine moves Moderna, for example, but I still think it's a positive. So I know it's pulled back a little bit from that peak run to 51, but I like it here. I think it's good value.
All right. I want to call your attention to 3 big after-hours movers. Chewy, for one, plunging on earnings. The company missing estimates, giving weaker than expected forward guidance. Shares are down by just about 10%. Meantime, ChargePoint rallying after posting a big revenue beat. Okta under pressure despite topping estimates. Steve, your pick. Which of these names you want to talk about?
So Chewy, I'm long Chewy, and if you look at how many pets were bought during COVID, it's not as if you're going to stop feeding your pet. I understand there's more challenges ahead for them, and maybe they missed a number that the analysts were focused on. But this is one that's going to be a long-term hold for me, and I would bet sooner rather than later this punches right back above $100 in the stock chart.